Hey, it's Andreas, and let's talk about this company, Kune Cranes. They're doing the maintenance for the ocean cleanup project here. You know, the interceptor made famous in the Mr. Beast video, showing how they took a lot of plastics from the oceans, cleaning up outside of cities. Terrific, fantastic for society. And if you're new to investing and you're curious to learn more about how you can analyze a company, and you want to take a look at the company that does something good for society, well, then this video is perfect for you. Let me guide you through this fact sheet made by the company called Morningstar. They make a lot of fact sheets for funds, and in this case for Nasdaq as well, going over the company profile, compiling a lot of data about Kune Cranes. Now, other than maintaining the ocean cleanup projects interceptor, the Kune Cranes main business area is cranes that take containers off and on ships in harbors. That's the main business. They're doing the maintenance. That's what all this complex language in the company profile means. All right, so let's take a look at a few numbers, and then after going over those, I will talk a bit about what these numbers mean for the actual business, give you some quite good insights. All right, first of all, let's take a look at revenues here. Now, this is in millions of euro. So from 2013 here, we can see that it was about 2 million euros, and this has increased now to about 3 million euros. So this company is growing in revenue. Revenue is just total sales, everything that the company sells for, basically. And we can also see that the total value of the company here is 2.13 billions. You get this by multiplying the share price with the total numbers of outstanding shares. Quite logical. All right, now we see that revenue is growing. And we also see that this company has taken a hit here early in this year. It's down by 23%, which is more than the index. All right, so quite bad stock performance. We will take a look at how this affects valuation later on as well. But before we do that, we will take a look at margin, more specifically operating margin. And as you can see, operating margin here has increased as of late. And I will tell you what this means at the end of the video. You can see here the numbers are going up, and right now for last year we had 6.7% in operating margin. Quite good. And the final number before we go over to insights is the price to earnings ratio, and we can find that right here in the valuation analysis box. All right, so current price to earnings ratio is 19.68, and they are getting this by dividing the price, one share, this right here, 27.21 euro, with the earnings per share. All right, that's how we're getting this number basically. And to analyze whether or not the company is over or undervalued, we take a look at what's the average for the last 3 years, 5 years, 10 years. We can see here that in the average of the last 5 years, this company has traded at the valuation of slightly above 21 price to earnings. So right now, in a historical sense, this company is actually undervalued. And we can see that, it's a small cap company, it's undervalued, it has some potential. But let's do some insights on all these numbers, all right, before I talk about how I think that this company will perform versus the index. So we saw that the company was increasing operating margin year by year by year. And what this tells me is that this is a very niche industry. There's not a lot of competitors out there. So they're able to increase margins and become more and more profitable. And just think about it, how many companies can you come up with on the top of your head that's making cranes for taking shipping containers off and on ships? Not so many, right? And if you compare this to, for example, the car industry, where we see a lot of competitors, a lot of competition, we see electric vehicles coming in with new technology that's giving a lot of potential for disruption and taking out old technologies. This can be seen as a risk to the business. And if we look at cranes moving around containers, that's not a super sexy area to talk about. Not a lot of engineers, in my opinion, will go out of college and try to innovate this area. And this means that this niche industry with low competition is not at a great risk of being disrupted by new technology. So this gives me a sense of that this company can be a safe place to invest money. And given that the average price to earning here for earlier years is higher than right now, this tells me that this company is a bit undervalued. And if we want to assess security of investment further, we take a look at debt to equity, and you can find it somewhere here in the fact sheet. And as far as I can remember, for the last year it was 0.3. So that means that you divide the debt with the total number of equity. So if you have one currency unit of debt and 3 currency units of equity, then you get 0.33 in debt to equity ratio. So this company does not have a lot of debt on the balance sheet. There's not a lot of risk of bankruptcy here. Small cap value stock, I think it will perform just like the market. It will perform around the same as an index over time, maybe slightly above, due to there being low competition and then being able to increase operating margins. So not a super exciting company, but a company I think will be able to survive and thrive in the economy. And very nice that they're doing this type of CSR project with the ocean cleanup here as well. Terrific, great value for society. I hope that investors of this company make a ton of money going forward. Take care now, invest safe, bye bye.